We'll just turn it right over to Tyler too. Yeah.
Today, we have a lot of questions on the Crypto Advantage product line. We've been getting them from the leadership, customers, and we wanted to set up this call directly so that he can answer every single question that you guys have been asking, a lot of your concerns, different things that you just want clarity on. So I'm going to pull up the list. We all have access to this document. So we're just going to go through it one by one. So if you are ready to go, we're just going to run through a series right now. We have about 23 questions, a good amount of questions, but hopefully we'll be able to just fly through them all very quickly. So
should I turn on an interrogation light?
What was that?
Should I turn on an interrogation light on me?
Not yet. Depends on your answers.
23. I was like, 23, that's a very specific. We have 23 questions for you. All right. No, fire away, guys. Let's go.
All right. So number one has been, what is the worst case scenario on the 0% chance of risk and ruin? So when they say the 0% chance, they're talking the combined multi-trades profile, not the raw profile. And they're asking, what is the worst case scenario for them? Everything goes wrong. What is their risk in that profile?
Let's break this down into 3 categories of risks, okay? Just so we don't have any confusion in the future. So first, the type of risk I'm going to talk about is the risk pertaining to the trading itself. Okay, so what can go wrong with the trading bots, right? So let's address that. Worst case scenario, the trading bots are completely wrong on all of their predictions, right? And in that case, we go against the market and we end up losing a few trades and we trigger the stop loss. The maximum stop loss per trade, per account is 20%, okay? Now, to be clear, that doesn't mean that's 20% of your total account. It's 20% on that particular currency. So let's take an example. If you're trading on the multi-trades script, you have BNB, Matic, and Sol, like all of these are being traded at the same time, and Litecoin and so on, right? So let's imagine that the worst case scenario happens for the Litecoin bot, and the Litecoin bot completely screws it up and we hit the stop loss on that. That means you will have a 20% stop loss triggered just on that one particular currency, which represents 1/5 to 1/6 of the total balance. So that would represent 4 to 5% of the total account size. Okay, so that's your worst case scenario in a trading bot failing. Okay, now when we say if everything goes wrong, there is a second thing here, which is what happens in case the underlying exchange where the trading is happening. In this case, it is Binance, and here soon it will be Binance and Bybit. If an underlying exchange just falls apart, then there is nothing left, right? Then there is nothing. That would be like a Lehman Brothers case in 2007, 2008, where you have a liquidation at the market maker itself. So in that case, it's not a question of our stop loss and do we trigger it and so on. It's just a case of, does the exchange go away, right? Like I think in a previous discussion, we talked about what if tomorrow Bitcoin just goes to zero, the crypto market just goes away. Then we're in uncharted waters. I genuinely do not know what happens there, but the chance of that happening is pretty much non-existent at the moment. The third type of risk is the risk of fraud, right? The risk of what happens if the person who is running the trading bot, the person who's doing the trading, what if they run away with my money? That is impossible to happen. That's why we use Dart, right? So that's the reason that we use Dart and why we work with Dart only is that the money does not go into any trader or any trading bot's account, right? The money actually goes into accounts that are controlled and supervised by the Dart team. So nobody can take the funds and run away with it. So that risk does not exist. Realistically speaking, the risk of the crypto market itself collapses and the exchange collapses. That is a possibility. In that case, I do not know what happens. In case of the bot, the risk of the trading itself, that risk is very well managed. Like I said, 4 to 5% of your total account size in case one of them triggers. Now, if the cataclysm happens and every single one of the trading bots fails and all of the trading currencies go down all at the same time, the Luna event happens on every single one of these currencies, that's when you would lose 20% of your account. So the absolute worst case scenario would be 20% of the combined account total, because every currency would hit that. But again, we have never seen that happen. We haven't actually seen that happen even in the Luna scenario, right? Only Luna dropped to that level. All of our other currencies were still there. They still existed. Is that satisfactory?
Extremely satisfactory. We
All
covered.
right, I'll dim the light a bit.
All right. So you actually answered number 2 as well, which number 2 was, if Bitcoin was to do what it did when Luna imploded, what could we expect from both scripts? So you did go ahead and cover that. And you did say that that would be kind of uncharted territory in case of Bitcoin, right? Because that's the major, that would be the whole crypto market kind of disappearing essentially.
To be fair, we might actually make money, right? Because we short as well. So the bot might be shorting, a currency collapses, and we still make money on it. The question is, do we get paid that money from the exchange? Because that exchange might not exist anymore, right? That's the real question. So the bot might win. We don't know if we get the money out.
Mm-hmm.
If Bitcoin explodes, there's no one making money on any shorts on the market. There's no way.
Exactly. Yep.
Yeah.
Because the underlying exchange, their entire liquidity would collapse.
So
Yes. Go for it, Tyler.
no, I was just going to keep running through the questions, Cam. If you have any more that aren't on the sheet, we'll just save all those ones for the end and we can go back through them. So the next one is, what is the risk per trade? And Hitesh, obviously, you know, we know that that can vary now that things have been combined. We're all running with combined, but on average, from what we understand, typically 1.5% to 2% per trade. Are there some algos less percent?
1% to 2%. So we have 1%, 2%. That is the range on the trade size. And then your leverage varies from 1x to 20x. But most of it, I believe, of the 6 pairs, 4 are on 10x and 2 are on 20x. So that's the leverage and trade size breakdown. And by the way, we're already working on making this very transparent. So, you know, the TSP stats page where on Dart, where you're able to see the stats of the script publicly, we've requested that they can actually show all of the currencies being traded as well as these settings on that page. So anybody will be able to evaluate that at any given point, because these are constantly changing, right? Like we change them practically every 2 weeks or so.
That's awesome. That's good to know, so that people will be able to see full transparency on the risk settings. And that's another thing that, you know, we always try and talk about is, hey, this isn't just some bot that's going unmonitored. There's a team of quant, you know, analysts behind the scenes that are modifying the risks based on market conditions as well. And what you just said clarifies that as well. And that transparency will also clarify that for the customers and allow them to see, hey, they are modifying the risk on these pairs based on market conditions. So that's great to know. Number 4, we already answered this, but I'll just read it so everybody knows that we covered it and we can reiterate. There's a 20% stop loss per pair. If 4 pairs are being traded, does that mean there can be a max 80% loss in account? But what we've explained is that your capital is split between all these different bots. Every pair is its own bot, essentially, being combined and traded on your account. So if we look at that, you know, you're trading, let's say 4 or 5 pairs, but your capital split up amongst them all. So if each one takes a 20%, the worst is 20% of your actual account. So that is the risk on the combined multi-trades, which I'm not sure about all of you guys, but I'm very comfortable with 20% being the worst case scenario, and every bot would have to fail, not just one. So that's peace of mind. Number 5, how long has the hedge fund been running? So, you know, how long have you been operational, you know, in all terms? And I guess to make this a 2-part question, how long has the hedge fund been around doing business indefinitely? How long has it been around doing business in the crypto trading sector? As I know that these are 2 totally different parts of your business.
Correct. Yeah, they are completely different parts of the business. In fact, the hedge fund does not directly do crypto trading in this manner. It also does the same thing. It deploys some capital towards trading. It's very much like a participant, like all of you are. So it's not behaving any differently there. This crypto trading has been active since March of 2021. Since then, this crypto trading has been running. we had one major reevaluation in December, January, and then we had another major reevaluation on this risk settings in May, which is when the Luna collapse happened. And what we changed fundamentally was introduction of a hard stop loss instead of having the hedged mechanism that we were using until then. And hedge mechanism worked beautifully. We did really well. We were profitable through the Ukraine invasion. We were profitable through the Scarlet Saturday. We had no problems, except when the Luna collapse happened, effectively the hedge was meaningless, right? Because the currency imploded. So that's why we made this change. So now, even in case of an implosion like that, we will still be able to survive it, but just, albeit we'll have a stop loss, but that's what would happen. So in terms of this trading itself, it's been running since then. The hedge fund predates that. Like I'd mentioned before, we've been doing stuff in the oil and gas space and in the real estate space before that. So we have been around almost 3 years at this point in the hedge fund environment as a fund. But all of these activities were basically being done as individual LLCs before that. We just combined them into a fund, and that has been around for 6-7 years.
Amazing. We've always talked about the funds having licenses to operate as a hedge fund in multiple different sectors. We do know that you have shared the license with us, but for reasons we have not publicly put that license out there due to names and information privately that you said was on there that ideally shouldn't be shared. Can you share the specific licenses that they are?
Yeah. So actually, let me break this down a little bit more. I have a little more context now to why you asked about the hedge fund. So the hedge fund doesn't actually handle anybody's money, right? The hedge fund is kind of inconsequential to the whole thing. The hedge fund's role is that that's the provider of the trading scripts, right? The trading bots are being provided by our hedge fund. But the hedge fund actually doesn't touch your money or interact with your money whatsoever. That's more to just give you some context of the history where these bots have been used and so on. Your money is really being handled by DART, right? DART is the entity that you really want to know, okay, what is the qualification? How is the money being managed? Is there any oversight on it? What if they run away with the money, right? That's the real question. What are the licenses there? So there are currently maybe only 2 licenses in the world. One is the one that is called a CASP license, which is governed by the CySEC. That's the Cyprus SEC, Securities and Exchange Commission. And that is the license that DART has applied for and operates under, in addition to an MSB license, which is the Money Services Business License. That's in the US. So whenever you're a company that is handling people's money and moving money from one place to another, you need an MSB or a similar license. So DART operates on an MSB license. You guys actually get to see that whenever you send money into DART, it actually shows you money being transmitted under MSB license. It actually shows that on there. So you actually have that for all the money that is transferred from the US side falls under that. That's also what governs all of your KYC AML stuff. And then the money that is actually handled specifically for this is being put in an account and it is being governed and overseen, that is done under that CASP application, which is one of the only ones in the world that governs the actual, okay, you have to make sure that when you say you're putting 100,000 into this bot, you're putting 100,000 into that account. It's not that you're putting 95,000 in and somebody's pocketing $5,000. You can't do that. You have to actually disclose all of that to government agencies, in this case, CySEC. So the weird thing is that there isn't really an infrastructure in the world at the moment, regulatorily speaking, that actually defines this really well. So what we did is we took our hedge funds infrastructure and said, most likely when the government comes down on all this stuff, they're going to demand a structure that is very similar to what a hedge fund has to comply with. And so basically we are using that kind of a structure. So that's where the hedge fund talk comes from. It's not because there's a real hedge fund managing this. If it was a real hedge fund managing it, most people couldn't participate, right? Because it would be accredited investors only. But we basically implement that same kind of oversight structure via Cyprus and CASP licensing to develop that. So it's personally, I've been in this space for a long time. I have not seen anybody have that kind of a structure in place. And this is why we feel very confident. This is why we deploy our capital with it. This is why we make our trading available through DART, because to us, it seems like the safest way to do it.
All right. So that's the big thing, is that the hedge fund simply is just using the software themselves, and really any questions when it comes to capital, which is what everyone has their worries on, that is on the Dart side. So we have the Meet Dart call. So that should be the primary focus when it comes to that, as the hedge fund is not
Correct.
in controller and in management of any of our money specifically.
And if you guys would like a follow-up call on that, to have the Dart management team available again to answer any additional questions, we can absolutely organize that as well. So again, let's bifurcate this so it's very clear. Any questions that you have on the trading side, the trading bots activity, how is it working, what decisions are being made, that's stuff that I can speak to very well. That's on the mantra side, hedge fund side. The hedge fund has licensed this technology to Auvoria Prime, right? And Auvoria Prime is now using Dart. You've engaged Dart to be able to kind of implement this and make sure that everybody's money is handled safely and you're not having to touch people's funds. And that's a separate thing. So I can speak to both sides, but again, just clarifying that. So if people have that question in their mind, I'm not Dart, right? I cannot speak for everything in relation to Dart, but I know them very, very well.
Very good. Now, this is a, kind of a side question that again isn't as relevant, because you would turn it back and say, well, how much is really under Dart's hood too? But on the mantra side, maybe just give some of these inner circle leaders some peace of mind. If you don't mind telling us, how much do you guys have in total actually on the fund under management in terms of assets? I know your oil and gas deals, all of the combined kind of that you guys actually manage outside of Dart.
So yes, there's a lot that is, most of our holdings are actually in the oil and gas and real estate space. They're actually not in the crypto trading space. In the crypto trading itself, this bot has managed anywhere between $1 to $5 million at a given point in time. And the reason why you don't want to go significantly higher than that is because none of the cryptocurrencies, except for maybe two, have the volume to support anything beyond that. Okay, so let's take a very simple example. Let's say that we have $1 million in trading. And that is, I'm talking specifically for one currency. Let's say BNB. We are trading BNB and we have $1 million towards it. And we are doing 2% trade size at 10x leverage. That means every trade is entering the market with $200,000 effective. Okay. And you're doing that trade 5 times a day. That means, and we are typically doing more than that, right? But let's say we're doing 5 trades a day. You're now looking at $1 million worth of volume that is being handled just by our bot alone. And this currency has maybe 700 million total global volume in 24 hours. The moment you approach like 1% of the total volume, you are in danger zone, because now you are no longer predicting the market, you're affecting the market very significantly. So if we get up to 7 times of that volume, whether it's because we are doing more trades or because our leverage is higher or because the amount of money in the system is higher, we can no longer support BNB. So we have to then shift over to a different currency. And that's why we do it the way we do it, where we have Solana, Matic, DOT, Atom, BNB, LTC, because combined across all of these, then we are like, okay, we can manage like, $30 million. And even that, we are very careful on, because the volume shifts, right? So in some of these currencies, you have the volume that is dropping down. There are currencies we used to trade, and we were comfortable trading something that had a $150 million volume. Now we won't trade them anymore because that volume is not sufficient for us to be able to get in and out of. So I think if the core question, I think, is probably around how much money can this thing safely manage? Does this thing have a history of managing money safely? And the answer to that is no more than 5 million per currency, even in the best case scenario. I would not do more than that. And frankly, we have done that. I think you guys might remember when you started deploying, we had a discussion. I came back and I said, guys, we're actually testing 6 other currencies. We're probably going to add 2 more in the next few weeks. And that's why, because we're trying to, when the volume starts decreasing in the market, we start looking for what other currency can be added in, so the amount per currency goes down.
So in the scenario that you can't add more currencies and that has been maxed out by, let's say, the volume in the field, what is the solution?
Then the solution is probably shifting over to the kind of bots that do trades on very high volume currencies, basically Bitcoin and Ethereum. And those will probably have lower performance compared to what we are doing right now. But again, to be very realistic, we're talking about once we've crossed like $50 million AUM on these currencies alone, right? At that point, would that be a concern?
You said 15 or 50?
50. So roughly speaking, this is ballpark figure, right? Roughly speaking, you're looking at 10 to 12 currencies and you're looking at $3 to $6 million each. And that's where the 50 million kind of comes from.
So there's more currencies down the line.
Oh yeah, we have another 12 currently that we are running the bot on. We are training the bot, but we don't, not all of them will qualify. So we'll typically find that out of every 10, a round of 10 tests will result in 2 currencies that we will actually pull out and say, yeah, this is stable and we like this. We can actually make it live.
Gotcha. I believe on one of the earlier calls, I don't expect you to remember this question, but I was asking you about if we could have 50,000 accounts made. And when I asked you that question, in your mind, were you thinking, oh, okay, well, as long as, it doesn't equate to over 50 million, we should be fine? Is that what was correlated? And is that what's correlating with, let's say, your guys' minimum is 250. I think your guys' maximum to put in is 200 grand. That's correct, right?
No, I believe that was raised. I believe that was raised to 500,000.
Okay, it was raised to 500,000. But the number that I should be kind of basing this off of in general is, okay, let's say we have 20,000 people using Crypto Advantage through us, as long as it doesn't equate to over 50 million, we should be able to trade smoothly.
Okay, so that's not a binary question, right? So it's not like at 49.9 it's perfect and at 50.1 it doesn't work. So this is a spectrum. So as we
the market fluctuates, you're saying, right?
Yeah, well, the market fluctuates, but also we are not going to go from 1 million to 20 million in a day, right? So as we start going from 1 million and we journey towards the 20, we are watching what's happening with our bots because of that. And as we start noticing more things, we start taking action on our side. We might start adding more currencies in. We might have to change some settings. My point is, by the time we get to 50 million, this is going to be a very different set of bots than what it is right now. Because right now, these are bots that are running $1 to $5 million. Then we are going to be at bots that are running $20 to $30 million. By the time we get to 50, the behavior is going to be very different. So if today you said, hey, I have $50 million I want to put in right now, we couldn't actually handle it, right? We generally do not have a way to handle that. But because this is going to be a process and it's going to happen over the next 3 months or 6 months, we will have plenty of time to be able to accommodate that.
Okay. Got it.
Yeah, and it's not much different from growing, a Forex PAM to 20, 50, 100 million. Your leverages drop, your risk drops. You got to significantly change things with every trading strategy and style. There's a cap on all of them in terms of growth and what they can handle based on their strategy. So that's great to know, Hitesh, and good to know that you guys are on optimizations as we grow, because some people don't expect things to be different when they get to 50 million than they were when they had 100K and their whole life.
Look, the simplest way to look at this is you have small cap companies, stock market, that are going to give you, 1,000% ROI if you get in on the right time. But then as you move towards the market as a whole, it kind of averages out to 5 to 8%, right? Because the overall market, the larger it becomes, there is a maximum amount that you can capture with that. So really, there is an ideal size. And when you go beyond that ideal size, you can't really capture any more than what is available, which will be 3, 4%, 5% a year. And I don't think any of us want to be doing that. We wouldn't be doing Auvoria Prime if that's all we wanted.
Spot on.
All right. Well, let's keep rocking through. This is one that you can definitely answer. So when you're doing your tests, how is risk assessed in the style of trades that you decide to deploy, right? Obviously, the way you trade, everything changes and the risk management changes, and it'll continue to change as we grow. So I guess this question is multi-tiered, but just, how really do you assess what kind of risk to deploy in your style of trading on these different currency pairs?
So from a methodology perspective, it's pretty much the same as you would do on Forex or any other kind of trading. We have significant back tests, basic logic. Then we apply that. We put it in live tests on very small accounts. Then we do it by very small, I mean like $1,000 account. And then we will increase that to about $20,000. We look at it in a live setting for 30 days on each mode. And that's how we determine if it is performed to scale. In terms of the criteria by which we determine whether or not this is good, actually is different for each currency. So when you said earlier that, essentially these are different bots on different currencies, they're not just like figuratively different. They are genuinely unique bots. The settings on each bot for each currency are completely different. So they're not the same at all. They're trained on the behavior of that currency, which might be very different from other currencies. So you can't even call them the same trading bot. What we are looking for is a Sharpe ratio that's above 2. That's our first basic thing. We're looking for a Sharpe ratio above 2. And then we are looking for risk of ruin at 100 trades to be less than 1%. So if you're at less than 1% at 100th trade, and you then say we are never going to do more than 72 re-entries on a single trade, well, you're never going to hit that complete account blow up scenario, right? So that's kind of the criteria by which we are operating. We are looking at a risk of ruin at 100 trades to be less than 1%, looking for a Sharpe ratio above 2. And once we see that in our back tests, then we will move those to live testing. And on the live testing, like I said, 2 out of 10 will typically move on to, okay, this is good, this pattern works, we're now going to move it to live. And that's when we add on the stop losses and so on.
That makes a lot of sense. So through all testing, you run it raw, and then once it works raw, then you add the extra layer of risk management to keep things around that 20% stop loss. Got it. Perfect. All right. How long have you been using Dart? I guess not only personally, but for any kind of business operations?
December of 2021. So we're coming up on about a year now.
Okay. And
I think they've been around only since September that year. So it's not like we were one of the early adopters.
And can you give us a track record of the trading in the crypto space since your inception and launch? Obviously, the group knows that there's been some changes, as you mentioned, and re-optimizations since different market conditions occurred, like Ukraine war and the Luna incident. But just since inception, if you had to take the gains, and summarize, what does that look like?
So here is where you will find, probably because of my financial background, it's kind of the opposite. Typically, you'll find people who are trying to sell people on this, they will try to show the best parts of their trading. And I am very concerned because if I show you the trading results that we had from March through January, let's say, they are so insanely strong. We're talking about hundreds of percentage in return. My concern is that it's going to give you a very wrong impression of what to expect, right? The expectation will be so high from people because, like we discussed in the beginning, that was when the markets were booming. You had crazy amounts of stimulus money entering the market. So there was a lot going on, which caused, I think they were external factors that resulted in that. The bots as they are today are fundamentally very different from what they were back in, earlier part of this year. So that's why I'm very cautious about putting out track record, because in people's mind, it makes them think, oh, this is a tried and trusted bot. It has been running since March of last year. But in reality, that's not the right way to look at it, because it's not the same iteration. It's not the same exact bot that has been running since then. It has changed quite a bit. So in terms of track record, from March to January, it was insane. We had months where it was 30 to 50% per month. And we had a couple of months with one of our high frequency traders that we work with. This was back in, if I remember, I think it was August and September of last year. where we had 110% in a month, right? So you have these kind of scenarios, but it's really not, I think, appropriate to point to that and say, join our bot, look what it did at one point, because it's a very wrong expectation. That was a totally different market, totally different bots. The currencies we were trading, some of them don't even exist anymore. Like it's such a different environment. So I would much rather stick with, look, this is what the bot is doing right now. We have a third-party supervisor on it. Nobody else does that. There is no risk of fraud. And this is what it is performing. I feel like you do a much better job of keeping the expectations managed that way.
What if a disclaimer is used?
Well, look, if I say I made $5 million doing this, disclaimer, you may not make it, you still set the wrong expectation. So my position is
that's a great answer. That's a very, very good answer. Yeah, absolutely. That would give the wrong expectation and people would be upset that they're not getting 20+%, 100%.
You would be setting people up for failure. Yeah.
So I guess the question is, what I think ultimately everyone on this call, we want to feel as confident as possible that the returns are going to be consistent and we'll be able to continue to be using this product as a product as in its form. I guess maybe if it's doing more percentage, that's awesome. But if it's not, if it's doing what it's doing right now, how can we be confident that it's going to be here, 2 years from now? Granted, Bitcoin hasn't imploded and Binance is still an exchange operating in the market.
I think the best way to answer that question is that we are here post Luna implosion and we are here post the January collapse and so on and so forth, right? The real reason why this will be around is because it's not a static product. It's not a product that, we're not saying, look, guys, we cracked the code. We came up with the perfect math formula and we just run this and it works. It doesn't. You have to keep adjusting it for different markets. And as somebody who has money in it myself, and as somebody who has, my investors' money in it, there's a fiduciary reason why we are going to keep doing that. We constantly are making these tweaks and making the adjustments. And that's why this would be around for a long time, because it's not a static product. There is no static bot. There never has been, and there never will be, that works consistently throughout multiple years. It just cannot happen because market circumstances change quite a bit. The single best example of this in the world today for an algorithmic trading fund is the Renaissance Fund, Medallion, if you guys are familiar with them. They closed out, they don't allow any external investors anymore. They haven't allowed anybody for 15+ years. It's only for their own employees now. And these guys have been doing average of 60 to 80% in many, many years. And yet, when the 2008 crisis happened, they took a bath on that. When the COVID stuff happened, they had a big loss, because you can't have a static product that works. Circumstances change. So that's the big goal for us. The big goal for us is, can we keep this consistent and stable and keep drawing value from the market while the market is around? If the market goes away, then we would take this technology, and we are already technology on other instruments. We're trying it on options. We're going to try it on different stocks. We're going to see what else we can do with it.
Okay, great. And you guys have a whole team that's constantly watching the bot and monitoring and analyzing the week to week and month to month performance to make sure that it's optimized. Is that what
Correct.
I'm hearing?
More specifically, day to day. It's day to day market. We are not even looking at, let's come back and look at it on the 5th of each month. It's very much, we are looking at it every day saying, is this within our expectations? Does something seem off? Oftentimes, I will just look at the summary and I'll shoot them a message saying, hey, I noticed this. Is this right? What's going on here? And they're like, yeah, there's an adjustment on Binance accounting. We're doing stuff with that. There's always something going on.
How big is the team?
8 people.
T-Mac, are we through most of the questions, or are there a couple more?
We have a good amount more. We actually are only on question 10 of 23. So just getting started here. So
let's let Tyler roll through them before we interrupt.
Yeah, on the equity page, it says the main pair is BTC USD, while the Dart raw script is trading only near USDT. They want you to explain the discrepancy. I also know the answer, Tesh, if you want me to cover it, but
No, that's okay. I'll just describe it very quickly. So first of all, that account that is being tracked on equity is not the same account that Dart is running the scripts on, right? That's something that we have set aside specifically so you guys can take a look at it. The way equity system works is that it's just a quirk of equity where they look at what was the when you had a particular coin or currency traded on it. Bitcoin was traded on this particular account way back, and so it just shows Bitcoin as the main pair. I'm not sure when that falls off, if it falls off, but it has not traded anything but near over the last 4 or 5 months. This account was completely dormant for almost a year. So it traded Bitcoin, then was completely dormant, and then it was being used to trade near to do the testing. I believe the way it works is that whichever currency had the most volume on the account historically is what they show. And when we were doing the Bitcoin stuff, it was way bigger volume. So I don't think we're going to ever be able to, I don't think we'll overwrite that without near trading anytime soon.
understood. Let's see here. So this was one that there's some discrepancies, I guess. So the raw profile is supposed to be a duplicate of that equity link for the most part. But on the 26th of September on our side for Dart, for the following 4 days, it saw the same trade results, whereas the equity link showed fluctuating results for those days. What is the reason for that?
Remember when I said these are actually 2 different accounts. So they should correlate, but they won't exactly correlate. So remember, we were doing the merge between the raw and the different scripts together. We were trying to merge all the bots onto the same account. And we then had to pull that back because of various reasons. I'll come to that in a second. But basically during that time, we had this account set to literally take one trade on a fixed trade size with a fixed take profit level. So all this account did for those 4 days was that one trade, hit the take profit level and stopped it. So you'll notice, actually, if you go back and look at those days, that they were different unrealized P&Ls, but it had the exact same profit level that it took. That's just because that's what it was programmed to do. And then we kind of reverted it back to its previous version after those 5 days because we realized that the way we were trying to do the merging would cause a lot of issues.
Understood. So that was all during our merging time.
Yeah.
Okay.
This is one of the weird things, guys, because it's one of those weird scenarios where you're like, if this was some kind of a scam, why would they show this? Why would they show 4 days being the same? But weirdly enough, because they are very honest about it, because it's so transparent, that is what then raises the questions. If there was some guy sitting there, typing the numbers and he'd be like, I'll do 0.4 today, 0.8 today, 0.9 tomorrow, right? But because it isn't, now it triggers the questions because you're like, it's not possible that 4 days could be the same. But that is exactly what happened.
Awesome. That's great to know. How would you explain the new combined script to someone running one of the 3 scripts that was now combined into one? So essentially, to keep it simple, at least what I can answer really quickly, and Hitesh, you can clarify, is we're all just running the aggressive script now. We can get rid of the low stake and the default stake, and what was high stake or aggressive is now just our combined multi trades as it had no risk of ruin, and we added the raw profile.
Yeah, that's basically it.
Yep. Perfect. All right. How is risk of ruin calculated? I believe we already kind of covered this. You talked about 100 losing trades, 1%, and then you go to 72 and then run it and forward testing and then add risk management once it goes live. Yeah. Okay. Cool there. We covered the equity account. One of the questions here was about the equity account being 1.5-year-old, but only data from 16th of April. Can whole history be made public? Obviously, the whole history is different and was dormant for a year, so that was covered. Is it possible to make the trade history public? Trade history is all public already on the TSP scripts page. Okay, 17. What do utilization and realized P&L actually show? This is something you can obviously cover with your finance background, but I would compare it similarly to some of you guys who have used binary options in the past. And when you deploy a contract and bet $100, it goes from your account balance. It's utilized, but it could be in P&L or it could be at a loss, right? Similar concept here, Hitesh, you can cover if any differences.
Yeah, that is pretty much exactly what it is. So if you were doing the trading yourself, there's a field that you would see on Binance or other accounts called available margin balance. That is the amount of money that you have available to do whatever you want with. You can open new trades with it and so on. And then there is an amount that is tied up that you cannot access because it is set aside in case of a margin call on the trade you already have open. That's your utilization rate. And your realized P&L is basically for the day. Okay, this resets every day. So every day it goes back to zero. For the day so far, how much of profit have you captured and already are holding on to? Basically, what trades have already closed and what was the result of those closed trades? That's really what the realized P&L is. But it will go to zero every day. So just keep that in mind. So when you see that go to zero, that doesn't mean you were making money yesterday and then we lost it today. It just means the day has now reset. We have captured that money that has already been distributed into your account. And now we are starting a new day.
The next question is something more, I guess, for the Dart side, but they were asking if it is possible to implement the following filters for results analysis, such as custom date separation of total profit / fees and net profit. So the ability to separate all of that, because total profit, it kind of just shows including fees and not net profit. Can they do custom data analysis on profits?
So I believe this is all coming along with their next big release, which is, I think, sometime in November, where they're adding the graphs and calculations to the TSP stats page, and they're creating the exportable trade history with an account statement. I believe all of this will be a part of that.
Amazing. That is great information. Number 19 here for us is going to be, is it possible to add a 2FA code double check when setting up? So we're still having, I guess, some users that they'll set up the 2FA, but not re-verify it on Dart side. And I guess we're still running into that hiccup a little bit, even after their 2FA upgrade.
Yeah, I don't know how to answer that one because part of me is like, if they can't figure out 2FA, they probably shouldn't be trading. But the other part of me is like, if it is something that is, lack of user friendliness on Dart side, then we can tell them to fix it. I just can't figure out what to tell them because, we got in a call and I was on a Zoom with them and I was like, let's walk through this together. And I genuinely couldn't figure out how somebody could screw it up. So I just can't tell them what to do to fix it. So if you guys have any ideas, I'm sure I can go to them and be like, guys, your system is screwed up. Here's what's wrong. But we got on the call, we went through it, and I kept trying to think of how somebody might be making a mistake. The only thing I can think of is that, they used to have just the QR code, but now they have the recovery code as well. The only thing I can think of is that somebody's using those recovery codes and trying to use it as the 2FA code. That's the only thing I can imagine, but I don't know how to resolve that.
I think it might be something, maybe it's psychology related. Let's say a person who's not really into cryptos, like brand new in that field, and now he wants to set up the 2FA. He would feel more secure when there's like a extra layer asking, you scan the QR code, then the code start running there, and then you just put it in and to confirm that you have done it correctly. Maybe it's that. So like in major exchanges, you always, when you set up 2FA, you have when you have scanned the code, you add it to your authenticator, and then the service will ask you for a code just to recheck that you have done it correctly.
Yeah, again, that's a good suggestion. I can ask Dart to put the field there, but from what I remember, when you follow that process, in Dart's case, they literally ask you to enter that code on the very next page. So I think that is already somewhat being accomplished. But let me go back and take a look again and see, what the process is and what we might be able to do. Maybe I missed something in the past, but please, if any of you want to go through it and figure out what might be going wrong and give some suggestions on specifically, here is what would be better to do, they're very open to it.
Okay, very cool.
Somebody has here, can the combined script account history also be made public? I believe it already is. It's just the aggressive script. That's already, yep. Yeah, that's already done. How can customers be sure that Dart doesn't turn off their webpage and walk away with investors' money? We've covered this kind of in the Dart call, with at least Dart not being the actual custodian of the funds. But, you know, I guess their question is, how can they be sure that Dart doesn't just turn off the web page and then they can withdraw the funds from the accounts they were managing or overseeing, I should say. I guess that's their bigger question.
So again, this is one of the, let's imagine there's no malice behind it. Let's say there's a technical issue on Dart's side and their website goes down, right? The same question applies. What happens to the money? Does somebody from Dart's team have the ability, let's say a developer that works for Dart, do they have the access to that money? They don't. They have no access to that capital whatsoever. When the money goes into Dart, it's actually not even going into quote unquote Dart, right? There's not a bucket of money called Dart, which they have access to. When it goes to Dart, it actually is either going into the account of the MSP, if it is US based, or if it is going overseas, it is going into the Binance account or the Uphold account or whatever, right? One of those exchanges. So there is no developer, no support member, none of the workers at Dart can actually access that money no matter what. So they can't turn off the site and walk away with it. That's the first piece of good news. Now, obviously, from your perspective, just because they can't get it doesn't mean anything, because you still can't get it either, right? If the website goes down. So the other good piece about this is that there is a process in place. If something like that happens, right? Imagine everybody on Dart gets hit by a bus and whatever. At that point, you still have a process, even though it is a cumbersome process, where the government steps in and they say, okay, you were registered with us, you're an MSB with us, according to FinCEN rules and so on, where is all this money? And all that money is accounted for. So worst case scenario, even if all of that happened, you would still be able to get your money back. It would just be somewhat of a long process to get it through all of the legal and regulatory channels. But that already exists and that's all in place. Again, like I said, this is the only platform that I know of at the moment that has all of that in place. If tomorrow Binance goes down and they walk away, nobody has any clue what to do about it, right? It's just gone. And that's happened multiple times. There are exchanges that have just gone away and all that money is gone. In this case, if Dart goes down, there is no incentive for them to go down. If they go down, they don't get to keep the money or walk away with the money. So there's every incentive on their side to keep the system running, because they make money when a deposit and a withdrawal occurs. So that's what they want happening as much as possible. They don't want to just go away.
All right. Is it possible to add a function for customers to use their own equity link to share their personal account results? I already know the answer to that is no. I guess maybe there's
so
something.
not an equity link, but yeah, Dart is actually putting together a share link. So if you want to share your own results in your back office, you'll be able to click a button. It'll actually put together a summary of what has happened with your trading account. You can share that with people, because keep in mind, end of the day, your trading results are going to be different from somebody else's based on your compounding settings, how much you're putting in and out, when you're exiting from scripts, like all of that is in your control. So even if you're on the exact same script, your and my results might be different. So you actually do have that option. They are putting that together. I did confirm that. It's a little button that shows share my results. You click that, it shows you the TSP information, shows the code, and a little graph showing the performance of the script on your account. So that's something you'll be able to use as a marketing tool as well. This is all coming in November with that big update that I mentioned, where they're putting the exportable history and trade breakdowns and all that stuff.
Whoever typed question number 22, it isn't a question, so we're going to skip 22. 23 was, why is the performance from September a lot lower compared to previous months? Is that, I mean, we can just say market conditions, but is there anything else variable wise?
There are 4 variables. There are 4 primary variables that affect this. One is the volume and market conditions, right? That has been declining month over month for a long time. The second, which is an understated issue, but is actually quite significant, is when new capital enters into trading, it takes a certain amount of time for it to be digested. So let's take a very simple example. This is just a quirk of accounting, right? So you have $100,000 in an account, which means, let's say there's $10,000 in trading. I'm just giving an example. These are not exact values. You have $10,000 that is in trading. You expect that $10,000 is going to close with a $3,000 profit, right? So you're going to end up with a 3% profit. But let's say before that trade even closes, another $100,000 enters the account. Now there's $200,000 in the account. When that trade eventually closes, it adds plus 3,000. But from an accounting perspective, you're going to say we added 3,000 to a $200,000 account, which is a 1.5% gain instead of a 3% gain. So some of that is just a function of, as these account sizes are growing, it takes some time for those old trades that were already open. They are posting results. The new ones are not posting the results yet, right? So there's that going on. The third big factor is that we've been doing a lot of experimenting over the last 2 weeks. We've been changing scripts. We've been moving money between accounts. We've had to pause trading a few different times to accommodate all of that. So that also causes one of those effects. And the final one is that the bots have just slowed down. The bots have slowed down because the total opportunities in the market are much lower. You're seeing less volatility. So it's not just the volume, it's also the volatility, right? So you want big up and down motion, and you want there to be enough volume with that up and down motion that we can actually collect the capital on. So we are not seeing the up and down motion, and we're not seeing the volume, and we have been experimenting a lot, and we've had new capital adding in there to be digested. So those are all the different factors that affect it. The biggest one is obviously, the volume and the volatility in the market.
Obviously, you can't, like, I've been listening to the whole call, and I've heard the piece about how it was performing a year ago when, before the Luna crash, there's tons more volatility. I understand the market's been fairly flat for quite some time now, but the product's still working, every day. And that's one thing that, we do like about this product, as opposed to what you see in traditional FX, is that nearly, not every day, but nearly every day, there's some sort of trade that's taken place, normally in profit. Even if it's small profit, there's something that happens, which is great. As we have an intent to scale this and get a lot of people on it, people will ask, hey, well, how is it performed? What has it done on average? We can't talk about what's done in the future. So my two questions are: one, Tyler, this may already exist, but if it does, please send it to me. Is there something that shows the performance not on the fourth script that has a 2% chance risk to ruin, but the script, the multi-script that has a 0% chance risk to ruin, where we can see how it's performed in the past to share with people, or at least for us to know? And then also not on the aggressive fourth script that has a chance of risk to ruin, strictly the one that has a 0% chance. Is there a goal or an intention on what you guys are trying to aggregate for an average in terms of monthly returns? Are you guys making a goal to get to a point where it's 2% a month? Is there a goal where it's 8% a month? Like, what are you working towards? Because I've ran this for, I had it on moderate for 2 months, and then my account got updated onto this new script that has 0% chance risk to ruin, the multi-script, and it's been doing maybe half a percent, I think, a week, I would say, on average. So I just am curious what the goal is with that, because the clearer that we are, with what that intent is, the easier it is for us to give people expectations on how it's done in the past and what they could, foreseeably expect if market conditions are consistent.
Yeah. So great question. Let me break it down. First of all, we do not have a target defined. We do not operate with a defined target because it makes you make mistakes. What ends up happening is that if you say my goal is to make 8% a month, you're now going to be looking to code the bots in a way that you're going towards 8% a month, instead of coding them in a way that it eliminates the risk of losing capital. And that's our whole goal, right? It's the Warren Buffett rule, right? The way you make money is by not losing money. That's the first thing that we want to do. So that's kind of what we are focused on at the moment. So we do not have a defined goal. Now, I can tell you that even though we have not had a defined goal, even when we did the restructuring of the risk management after Luna, when we did that, we were expecting 6 to 9% a month. That was the range that we expected. And that is what we were seeing for some time. But then we saw it has been on a steady decline, and is very much you can see the proportionality of this. It's very much in proportion to the decline in the volume in the market. it's kind of tracking that. So we feel pretty good about it because that means we've done our job quite well. That the bot is looking at what's happening in the market and is readjusting itself to what is going on. It is not trying to create new trades when none exist. In terms of the marketing question of what can we tell people, what are we trying to aim for? We are trying to beat the market. That's really the fundamental way to look at this. We are trying to get, in general, double to triple of what the market is giving you. Now, right now, if you look at the market in general, it has been giving you negative returns. So our returns at 2 or 3% a month are, technically incalculably higher because we are not even just giving you 2 or 3 times as much. We're giving you the complete opposite of what the market is doing. So I think that's the way to look at this. We are trying to beat the market. That's our goal. And so far, we have beaten the market every single time. Even with the Luna collapse, we didn't fare worse than the market. We just fared as well as the rest of the market did. But that's kind of the answer. The answer is we are looking to beat the market while keeping our capital safe. That is our primary goal. And we'll do it as long as we can. Obviously, this is a high risk activity, right? Even at the safest settings, it is high risk activity. So there is the risk of something going wrong eventually. I know that's not the most comforting thing. Maybe Tyler can do a much better job with, give you the warm and fuzzies. Everything is fine. We're all going to be billionaires. But the reality is we are in a very weird environment. This kind of environment in not just the crypto market, but in the global markets has not been seen for at least, I would say probably the 1980s was the last time you saw this kind of environment, not even 2007 and 8, but it was a very narrowly defined contagion. This is a very different scenario where you have widespread issues in the market. So again, I'm going to get off the newsletter that I would write to my hedge fund investors. I'm not going to get into all of that, but what we are looking to do is beat the market. We are beating the market, so we are quite happy. I think anybody in the current circumstances is very happy with 0.5% a week. Ideally, we would be doing 0.5% a day. That's really what we would be looking to do.
Yeah, great response. No, cool. Got it.
When you guys were doing big returns, and look, I'm not the guy. You could ask anyone on here. I'm not the one who's searching for the biggest returns every single month, by no means. But I just was curious, when you were doing, over 15% per month returns, was it because of the volume being so much higher at that time in the market? Or was it just that the market had been trending in the directions in which the positions were placed?
Yeah, so it was actually both. A very simple example is you guys are probably very familiar with trend reversal inflection points, right? You're looking for the point where you think the market is now going to reverse. And so, for example, it is
yes,
the RSI is super low, so you're like, it's going to go back up. So you put a buy order. When you have very healthy and large amount of volume in the market, you almost never see a sustained trend in one side, right? Because there's enough people on both sides that you're going to see the trend reverse, at least temporarily. So you almost never saw very long drawn trades. You would see trades that lasted minutes, hours, and they would complete in profit, because even if you were wrong, the market was moving up and down so much, you would eventually hit your take profit points. And that's one of the reasons why I'm very hesitant to look back at that and say, guys, let's look at that as a model of what we could do, because that is not, almost anybody could make money in that market, honestly, right? Like, it was very, very easy during that time. Now, we did better than most, but it is still not a model to follow. But yeah, that was the biggest reason. You had so much volume that you are hitting those levels. Even when you are slightly wrong with your entry points, you could still recover from that pretty quickly. And that's the basic reason.
I know every market is different. Every bull run is not all the bull runs are the exact same. Not all the bear markets are the exact same. But let's say we, in the next 6 to 12 months, get into a new bull cycle. Have you guys, do you kind of expect some higher returns because of that? A similar scenario could play out?
Yes, we expect that our bots will typically outperform the market And when the volume goes up, then we will perform better. That's really the two fundamental bases or our premises on which we operate all of these bots. So yes, if the volume goes up and we enter into a bull run, then we should see that happen. We should be able to see our returns go back up in the 15-20% range per month. We think that's quite possible. Whether or not that happens, look, we might have a bull run, but the market is so different that somehow these bots don't work and we have to come up with a new series of bots, right? What I can tell you is that we would be working on them. Like we would keep working on those and keep making those changes as needed to be able to capitalize on those markets. The other thing is, I don't know if I expect a bull run that soon. It'd be great if that happens, but I don't really expect that quite yet.
Did you said you don't see a bull run happening in the crypto market like that for 12 months?
Yeah,
More?
not in the near term. And I'm not a prophet. I might be completely wrong. I'm just telling you that based on where the risk asset market is at the moment, based on where we are with inflation, based on where a lot of these macroeconomic signals are, I don't really expect a bull run in the crypto market unless it is correlated to a bull run in the stock market, which does not seem to be the case for a while.
Gotcha.
We like bear markets. Gives us time to cost average.
I don't know if we like bear markets, but bear markets are a necessity. And it is good to see them as a necessity to shed the bad things. It's just like it's a seasonal cycle. You just have to learn to live with it. It's the winter, and the winter is necessary because the nitrogen is going to get reabsorbed into the soil and we will have much better harvest next year, right? That's just how you have to look at it.
I like you.
Double that.
For the future, here's one I'm not sure if you're willing to do. Are you willing to give a once a month recap on how the accounts did as a review for our community? It can be less than 15 minutes.
Let me not commit to that quite yet because it wasn't something that I planned on doing. But unofficially speaking, yeah, I think we should be able to do that. Officially, let me look at my schedule and all the things that are going on and then give you an answer. That if not me, I can at least assign somebody from the team to do it.
He's the man.
Alrighty. Okay, guys, is that it? Is that all the questions? Am I free to go?
Thank you, sir.
We have another Google Doc with 27, actually.
Yeah, that was just part one. We have now part two.
Thanks, man.
Okay.
We
Thank you
appreciate
very much.
Thank you so much for your time. I know you're busy, and I know this group, who are, our top leaders, really appreciate your time as well. And so thank you very much.
Yeah, no, absolutely. Very happy to help wherever I can. Hopefully we get this thing ramped up and we'll talk soon. And good to see you too, Nick. It's been a while.
Oh,